Hey traders, welcome to your weekend video. This is Christian Fromhertz, Tribeca Trade Group. So we'll go ahead and we've got a lot of things to cover in this video, but I always like to kind of start with the negative. You always get the bad news or not necessarily the bad news, but what you really want to watch in terms of risk first. And I think that's important in trading. You always want to work for, my opinion, and this is right after Paul Tudor Jones, who always looks at the risk in his trades and how much he could lose first, and what the big risks of the market are, and then we could turn to the positive and really look to some of those better things that are going on right now, because it's not all negative and it's not all positive. So this is a good balance and good video that kind of talks about both. But what I wanted to talk about first is kind of the chart of the week. Really what kind of gave way at the end of the last week and opened it up a bit in equities on Friday. And, it's basically been, which has been a lot in the press and a lot of people talking about the move up in interest rates. And across the curve, last week we had Treasury auctions. Some went okay, some went somewhat not so good, and I think there was a lot of attention to that. We could definitely tell every time that there was a bond auction last week, there was a little bit of volatility that creeped up, a little bit before and then thereafter. So definitely some worrisome feelings or tensions regarding those yields. And what I kind of draw to in this particular chart that I've got is, so I've got chart of the week, which I'll get into, which is TBF, which is a little bit of a different spin on playing on playing treasuries and interest rates. But basically, the volatility in the interest rates. So Merrill Lynch has what's called a move index. What this index does is it looks at 1 month futures contracts in various different maturities across the treasury curve. So it is an average. It's not just one particular maturity, but you could see the white line is the move index. So I know I've got a couple different lines on here, but the white line is this move index, and you can see how as the volatility has gone up in treasuries, again, across the curve, you could see that it's had a reciprocal effect or an opposite effect in equities. And this kind of goes in line with basically what happens a lot of times in commodities. And, there will be certain people who will argue that, oh, well, this commodity or this area of the market has nothing to do with equities. I disagree with that. I think when there's big volatility in an area outside of equities, those equity investors could really start to look over at that area and get bugged out a bit and really become worried. So I think this is what we've had in the treasury market. And clearly, when interest rates have started to move up, it's created that volatility has spilled over to equities. So that is a must watch, and why I've got that number one, because I do think it's a risk. And basically what I've outlined is TBF in a way. So this is a little bit complicated because, if you want to go long something rather than short something, there's a way. The beauty about ETFs is there's an ETF basically for anything. So this ETF, TBF, is very similar to TBT, which a lot of traders look at, but it's non-leveraged. And what this ETF does is it goes up when treasury prices fall. When treasury prices fall, there's an inverse relationship. When treasury prices fall, interest rates go up. So this is this ETF looks at plus 20-year maturities in treasuries, and this ETF will basically go higher as interest rates go up. And you can kind of just think of it like that. And since we know that that's or I feel is one of the risks to equities, you could basically kind of think of this as almost like a hedge, and you could go long the TBF, and I would stay long the TBF versus a short-term moving average. So something like the 20 yield. The 20-day moving average, as I just turned my volume down here. So the 20-day moving average, which is the green line in this particular chart, you could go long, and it's only a $23 ETF. So I don't think there's really any need to look at options here unless you're looking for leverage, but you got a pretty low price instrument here, 23 bucks, and I just like a long here. And if it breaks the 20-day moving average, I think it will be a good thing for equities overall. And then you could just exit your trade. Right, so that's the way I would play it. A couple of things to note here in this, looking at how Treasury prices. Again, this is inverse, so Treasury prices have actually gone down, and TBF has gone up. I know this is tricky, but a couple of things just to realize in the straight technicals here. You got the 50-day crossing above the 200-day moving average, so that's a golden cross. And look at the volume confirming this. Maybe not so much volume here on the last leg, but certainly as this has broken the sideways trend. Volume has confirmed the breakout. So, regardless of trying to think about, there may be some resistance here and so forth, and that may be all that we go in terms of, treasuries falling and interest rates going up. I say just stick with a short-term moving average and ride the trend. And if it breaks, great, so be it. Get out of the trade, and equities should be able to get over this move in treasuries in the short term. All right, so that's one way that you could kind of profit from yields going up, and I think is a good portfolio hedge in case this continues to go higher. Interest rates continue to go higher. All right, so that's basically, and again that goes along with inflation, which is the other risk out there. I think a must watch, which I don't have pictured here, is the VIX. We saw the VIX really slip towards the end of the week. It was a little bit resilient in the middle of the week, and the middle of the week was tough trading. It was a shortened week last week, but depending on where you added positions yesterday, if you day traded and you put on positions in the beginning of the day, and basically that's my job as being CEO of Tribeca Trade Group, and what I do in the trading room in the morning, we have a pre-market session that starts, right around 9 o'clock in the morning. And what I look for every day is a name that could have momentum and a name that may set up really well for a day trade. And I think I did that just about every day last week. Talked about, hey, this name sets up well. This name sets up well for a day trade. I think we did BABA on Friday, which set up pretty well. I actually traded that for a day trade on Friday. But, I think a lot of the members have been kind of appreciative of that. Now, of course, no one has a crystal ball and knows what's going to happen on a day-to-day basis. But if we could find a trade or two to scalp intraday activity, I think right now that is a pretty good strategy to kind of have in your wheelhouse of trading, to be able to scalp a little bit in this market, because if you're a long-term trader, we'll go to the S&P chart, but this really, last week really didn't phase you too much, even though there was intraday volatility. All the trends that we've seen from 2 weeks ago are pretty much intact. But let me just talk about the VIX for a minute, and then I'll go into that. But you could see a big trail off and a little bit different. If you look at last week. So let me just zoom out. This is just a 5-minute bar. But you could see that it's just been kind of hanging in here, and then finally it kind of gave way. This was where we were on Wednesday with the Fed minutes. I think, which was really kind of weird price action, was the volatility came in all the way into the Fed minutes, which just didn't seem right. Usually what happens when you have an event on the horizon, usually what happens is volatility increases going into the event because, there's the uncertainty of the event. And then once it becomes known, then volatility in the VIX drops. It was the complete opposite Wednesday. So it just didn't seem right that the VIX went from a 20 to touch the 16 handle, and then the event came out, and then volatility moved up. So we had this back and forth all throughout the week last week, and then finally it was a little sticky around that 17 level, the VIX, and then it fell apart. So this is a must, in my opinion, is a must watch for next week. We want to continue to see that volatility, which it has been. Again, it's been back and forth a little, especially last week, but for the most part, since it reached a high a couple of weeks ago, it's been moving down, and it's been moving the right way. And if you look at the VXX, which I know a lot of people look at, even though I think it's a very flawed instrument, this has actually just finally got below the 200-day moving average. Again, different looking. A lot of people think that the VIX and the VXX should be almost the same all the time. They hold completely different contracts. So they're just made up of different. The VXX tracks futures in the VIX, and it's different contracts than what the VIX looks at. So that's why there's a difference a difference in performance on a day-to-day basis. But you could see this for the first time closed below the 200-day moving average, and also looks like this is what the 20-day moving average that I've got here. So slight, right at the 20-day moving average. So this will be interesting for next week. So if this continues to move lower, should be a pretty good sign for equities next week. So yeah, I started to talk about last week's price action and kind of what kind of trader you are. If you're a long-term trader, a couple of the positions. So for example, I manage a couple different portfolios. I manage one that is strictly cash. It's a cash trend portfolio. It's a systematic program, and I got long some things all the way back in here. Maybe waited for a little bit of confirmation. So I got long things like the FDN, Frank David Nancy ETF, which is basically it's the internet ETF, but the top holdings are the FANG stocks, and that's done pretty well. So while this was probably difficult, where you picked your spots to maybe put on swing trades last week, we really didn't. Other than this intraday volatility, for a long-term investor, you really didn't care, I think, too much about it. So names like that I've added, FDN, EEM, I added a couple other names towards the end of last week. No harm, no foul with that intraday volatility. Now, if you're putting on short-dated option positions, yeah, you might have gotten dinged if you didn't wait till the end of the day to put on your swing trade positions. And I did this, and I'm no problem admitting this, but a couple times last week I put on trades around midday, swing trade positions not going out to March or anything like that, but June, July, so forth. And yeah, I mean, you always want your trades to work well right off the bat, but if you put them on at any time other than the absolute end of the day on Wednesday or Thursday, you felt a little bit of pain as your P&L for that day went down. But all in all, Friday gave us a really good sign. I could talk a little bit about the option activity. Let me just talk about the few other indices. But basically, S&P, we're almost back to where we were. This was Thursday, so a week and a day in terms of business days, and this was last Friday. This was where there were some headlines, some political headlines came out, and that kind of caused that started the closing off the highs small pattern. But again, Friday ended that, so hopefully we have a different pattern after 1, 2, 3, 4 days of closing pretty decently off the highs of the day, which we don't want to see that as traders. So Nasdaq has had the strength, other than again this crazy day on Wednesday where we traded in a pretty big range and closed pretty close to the open. But Nasdaq has been where the strength is, and certainly in option activity, we've been seeing a lot more plays, in your FANG type stocks, in your momentum names, in your enterprise software names, in your Chinese internet names. Just a lot of momentum in the higher growth and momentum in the momentum names, right? I mean, look at the KWEB ETF. I mean, this thing has really been a nice outperformer. So this, I think, is healthy to see all this money rush back in to higher momentum names. That tells me that people are not being conservative with how they're trading. They're actually going into some of the riskier, higher beta names of the market. I think if people are doing that, if traders are doing that, and institutions are doing that, they felt like this dip was a good buying opportunity. If they were going into things like consumer staples and food companies and utilities and higher dividend, pharma names, right? Then I would think that people are worried about the short term, but it doesn't appear that that's how what we've got here. The other thing is when you kind of look at just some of the other factors in the market. Yeah, I think there's a lot more discretionary Monday. I mean, it is what it is. There's tax breaks for both corporations and for individuals. That's not a bad thing for people having extra discretionary money to spend. So, I continue to like things like the PEJ ETF as well, which is the leisure and entertainment group. This group hasn't really popped yet, but I think there's some good opportunities in here. But I also think sentiment is still pretty low. If you go to the fear and greed index, which a lot of the fear and greed index, by the way, the VIX is a component of it, but it's nice that they kind of give you a gauge of extreme fear to extreme greed. This even was the reading from Friday after the big move in equities on Friday is still at an 18. So there's still a lot of it's marking extreme fear. So there's still a lot of fear in the marketplace, which is a good thing, right? We're not all the way here. So I think that this is setting up well, and I think as long as treasuries really don't have that volatility, I think we could be setting up here for a nice move in the next couple weeks. Again, no predictions, no crystal ball stuff, but just liking the overall setup that the market is giving us right now. So let's talk a little bit about the option activity. I know I've spent a while just talking about some other factors to watch, but I think it's important to not just to look at other things besides option activity. For some, I think that's all that they look at, and I think that's it is what it is. I think it's a mistake. I think you need to have a bigger view than just what option activity is telling us. I think it's a great indicator, gives us great trade ideas, a great sense of sentiment and momentum. But clearly there's other things, and above all else, your trading process and your trading plan is much better. Will judge how your profits are much better than just reading the tape and watching option activity. All right, so that said, I would say for the most part, again, last week was a holiday week, but Tuesday, Wednesday, and Thursday, I could show you my individual names that I write down every day. And you could just kind of see without even going through the individual names, like here was Friday, for example, and all the call activity, right? I can't even fit it on one page. Then this was Tuesday, and let's see, this was the 21st, I think it was Tuesday. Look, I mean, it's about half that, right? And, same thing, I think I think that was Wednesday, actually. 21st was probably it. Oops, there we go. 21st. 22nd was a little bit better. Thursday was a little bit quieter in terms of option flow. Sorry, I'm jumping around here. But yeah, so it's not like there was bad signals on Tuesday and Wednesday and Thursday. They were just a little bit quieter. There just wasn't that much, and you just didn't feel like there was major momentum and just huge buying going on. They were very selective. So you could see there was some trades there, but it just was selective. And the other thing that I would note, which I talked about, I've talked about in a couple of videos. This I think was Tuesday's activity, which was a little bit better. But the one thing that we saw was a lot of aggressive Qs and SPY puts that had been going up. Just repeat. Not only in the beginning of last week, but the week before, especially Friday in particular. The Friday, if I go back to here to the S&P, so you can see what day it was. But generally we do see hedging, right? We see a lot. We do see SPY puts being bought, swept, as well as Q puts. But it's really the amount of puts. This started on this particular day, and it was, and then it fell over to Tuesday and Wednesday of last week. You kind of had to take a step back and be like, wow, they are really buying a lot of protection, and they're doing it aggressively. Now, the one thing that I noticed, and we talked about in the trading room, was most of those trades that they were buying in the Qs and in the puts, and a little bit in the IWM, but they were very short dated. So it kind of felt like, wow, What are they doing? Like, what's the catalyst? Why they're buying all these puts in a short-term nature? So maybe it was the Fed minutes. Maybe they realized that we had all these bond auctions, but nevertheless, that's all past us. I mean, so they weren't all weekly. Some of them were March options as well, but who knows? It's very difficult to track if they've gotten out of those positions and decided to take them off. Maybe some of them for profits, but we didn't see that at the end of the week. I think Thursday and Friday that definitely died down. I think even Wednesday, when Wednesday was the first day that I actually saw that in the afternoon, where the aggressive SPY and Q's puts just kind of tapered off. It didn't have the same frequency that we saw in the 3 days prior to that. So that was a good sign, and really it was immaterial on Friday as well. We just didn't see that aggressive hedging or downside risk or downside grabbing for puts that we saw, if that makes sense. So again, good, something that came out of the option activity. And then, I could go over a lot of different trades. I'm not going to go over just individual, every trade, because there's just too many of them for me to go over in this particular video. This is something that we go over in the trading room every day. So if you're not a member, check us out, TribecaTradeGroup.com, and you get my weekly commentary. So you could go right here to the product section. Hey, and you can get 2 weeks free. So there's no no harm, no foul to checking out our subscription right now, the Elite Trader package, which you get everything included. You get my market commentary. What I do basically, how it works is in the first, I do the pre-market commentary, and I try to focus on names, the previous day where we saw the names that we saw the big aggressive call buying in, and I try to look for a couple setups for day trades. And then what I do throughout the day is I come on the mic and talk about trades as they're popping up and what I'm seeing in the overall market, the VIX, bonds, everything. I talk a lot about Europe right now because Europe has kind of been a little bit edgy with how they've been closing at the end of the day. So all of the macro as well as all of the aggressive option activity on a day-to-day basis, real time. So I come on, if it's really important, I'll share the screen. If it's not, I just provide the audio all day long. And then I give a midday session as well, where I talk about the day's themes and just what we're seeing out there, just like I'm doing in this particular video. So that's really where I go into the nitty gritty. This is the weekend newsletter that I put out, but just to kind of give you a couple names that we saw towards the end of the week. A couple of the FANG stocks really come into mind. I could talk about Micron. I think at this point, I think everybody knows at this point that there's been anybody who's on Twitter and who's been watching some option flow has known that Micron has been a name that's seen a lot of call buying. I'm in it. You could always ask me as well. I think some other people on Twitter, they are, I'm not trying to criticize anybody, but there's a lot of armchair quarterbacks, right? I'm in Micron. I've been in Micron now for a couple weeks. I added to my Micron position when we first saw that call buying. So, I think a lot of people will just, after the fact, they'll talk about what were good trades. I will tell you, and that's different that I think when you get in the Tribeca Trade Group, you see me go into these positions live. So I'm not going to tell you at the end of the day what was a good trade because the price moved there. You're gonna see what trades I think real time that are good, and I'm going to get into them, and you're going to get a text alert, and you're going to see exactly how I'm positioning in it. But Micron, Facebook was another one. Facebook I went into last week as well. There was just too much call buying, and Facebook also just set up well, right? I mean, part of what made 2017 such a special year was because we just saw a lot of call buying, and it was a great year to, whenever there was a little bit of a dip, to go ahead and buy, and we got plenty of signals where just to kind of buy that dip into support of into the support of an uptrend. So Facebook, we saw this last week, and I kind of looked at a couple blocks that we saw in aggressive orders in Facebook, and I said, let's take a look at this. They had earnings, and they had good earnings. They ran up like a lot of names did into earnings, and then after they had good earnings, they kind of sold off. And I think the part of that was the overall market, but you really got a chance in Facebook, which again had stellar earnings numbers across the board, and now you're able to get into this name much cheaper. So that was my reasoning. I did not get. I like to see an MACD crossover. I did not get that yet, but I just said, hey, you've got support down here of the 200-day moving average. I don't know if we're going to retest, but I made sure in case we did get that retest of the 200-day moving average, that my duration in my trade, which was the May calls, I did a May call spread, that I've got time to withstand a little bit more volatility. And I also left myself open to add to the position in case it did get a little bit cheaper. But, I think that's exactly the type of trade that we're looking for. A name that has had great earnings, and you're getting into it cheaper, and you're seeing hefty call buying on those lows. So Facebook set up for a really nice trade. A couple of the other ones, Amazon has also been seeing call buying. Amazon has just been a beast. Netflix, we saw on Friday. I think a lot of traders took it on Friday and were day trading Netflix because we saw some nice, I believe it was May calls that went up in Netflix. So again, from what I talked about in the beginning of the video, they've really been going after these growth names and higher momentum names, and that's really where we've seen the big chunky aggressive call activity. Also, you could look across the tech space, and it seems the last couple weeks in this newsletter and in my summary, there's just been a lot more activity in the tech names. Also, some of the gaming names as well. But you could see, so that's, notice industrials, unless I'm missing something, I just didn't see much flow in the industrials group. So, maybe next week we start to see flow more in the industrials groups. I think a couple weeks ago, maybe some Caterpillar, we saw some calls, but it wasn't, this is just last week's option flow. So there's been some areas where it's been pretty quiet. And just to kind of back up the numbers, so again, it's not just about option activity. Look at the flow last week and the last 2 weeks in ETF inflows. There's been $878 million that have gone into tech. And the week before that, it was $1.6 billion that went into tech. So really, that's been the biggest area that's in the U.S. that's seen inflows. Overall, by the way, going back to sentiment, equity ETF flows had negative $5.3 billion of outflows. So, I think people are a little bit worried. And again, I think this is, if you're a contrarian, a good sign. And a lot of times I use the ETF fund flows for contrarian signals when they really seem to be a little bit scared with headlines and they take the money out. It kind of gets that last layer of equities out, off the table, and it leaves some dry powder for people to come back in. Since we've had that big, since we had the 10% correction, there's been a lot of money that's still been sitting on the sidelines. That if once they come back into the market, it's gonna provide hopefully some momentum to the upside when they do come back in. All right, and really, and while I've got the page up of ETF fund flows, it's really been not emerging markets, but international equities that have not blinked in terms of flows. Every week they still continue to show inflows. Last week in particular was emerging markets. So a bunch of different ETFs in this space saw inflows led by IEMG, which saw $1 billion. Which was your biggest inflow in any ETF last week. But you could see a couple other names in here. Developed markets also saw some inflows, international developed. But you could see right here from the EM space, VWO, EEM, SCHE, which is a Schwab ETF, also saw some emerging market inflows. So you kind of see where people are positioning themselves. All right, back to the option activity. So Microsoft has been another name that's been continuous. Like almost every day we're seeing some sort of Micron call flow. Intel has been another semi name. These semi names have really seen a lot. I could be adding 2 or 3 other names here. MCHP saw some call flow as well. ADI saw some call flow a couple weeks ago. So it's really been, in the semi space, they've really bought the dip in this particular group. It's been very strong. You could look at the whole group, which I like to do, just to see, what's going on in terms of the whole group. And I mean, it looks a hell of a lot better than an S&P chart, and really that's where people have been excited, and have thrown a lot of money. So, of course, I would say Micro on top of the list, second on the list Intel, and then a bunch of other names, smaller names have also been seeing the call flow. Cypress Semi, Skyworks also saw some flow last week, which, by the way, has been the best performer in the Qs month to date, Skyworks Solutions. And yeah, that's also on the list here as well. Baba has also seen some call flow. Some of the stuff is weekly flow, so it's expired, but still has been people have been looking for momentum for that. A couple other names in the space, NTNX, which I believe reports this week. QD has been another name that's seen repeat activity. Saw a big block on Friday, but this is a name that we also saw a lot of August call buying a couple weeks ago. And then what's different about last, tech obviously has been the same the last couple of weeks, but I would say what was different last week is energy. Hess drew a really nice aggressive call buyer in the middle of the week. I did not take this trade. Again, I will always tell you what I take and what I don't take. I'm not going to say, oh, did you see this Hess call buyer? How great of a trade with this? Yeah, it was a great trade. I didn't take it though. So it really matters, what you take and what you don't take. So I'm not going to say, hey, I called it or I flagged it for anybody. I think that's kind of nonsense. But that was a great signal. What I'm looking at for next week. And this energy group has been a difficult group. So I like to look for trades, which Hess, absolutely did set up very nicely. You had, a retake of the 200-day moving average, which is the white line here. What I'm looking for next week is to maybe start a new XOP position. This was a position that I got into back here, and I took it off on the break of the 50-day moving average, so it was a profitable trade for me in cash. I'm looking to do the same thing in cash and have a stop versus the 200-day moving average. So, barring anything really unusual, if it doesn't work, I'll get out of it for a small loss, right? That's what it's all about: small losers and hopefully big winners. And so I did this last time. It got above the 200-day moving average, and it worked out very well. I did not get out at the top. I got in. I think it was the break of I think it was this candle, but still was a profitable trade from where I entered. So I'm looking to do that, and also XLE is kind of setting up the same way, and we have seen some call flow in XLE. So last week, yeah, just a little bit. I'm thinking more of Exxon. We saw some call flow in Exxon last week. Exxon below the 200-day moving average. Could it bounce? Sure. But I think there's better places to kind of play in this space. A few other names in this space. FTI, I'm not that familiar with this name, but we've seen it's come up now a few different times. ERX, which is the 3 times levered energy ETF, saw call flow as well. So that just kind of tells me that somebody's looking for a short-term move when I see ERX, again, basically 3 times levered XLE. APC saw a nice call buyer. Slumbers A saw a call buyer as well. In the mining space, BHP actually came up twice last week. I did not take this trade, but it is on my watch list for next week. I think this is another iron name. And it's sitting above the 50-day moving average. So I would like to see it, maybe get into the value area considering it's right in front. But we saw call buying in this one twice last week. Dow DuPont, some calls for next week. So really short-dated stuff. I've got Masco in here. Masco saw a big block trade. I like this chart in Masco, MAS. So again, a lot of this is just, you don't have to worry about, well, what are they thinking and so forth. As long as you can, if you like the technicals, if you like the trade, and where you can get out of it easily, I think, if it doesn't work, right? So Masco is basically just reclaim that yellow line. I think if you were to draw a 100-day moving average, maybe that would be your stop. Yeah, the light green line here, that would be your stop, I think, if you like Masco. Go long versus that. Again, that's just my opinion. Of course, this information is just for informational purposes only. Biotech and healthcare names, not too many. Again, they were not too active. AbbVie, I guess I could have put that name on the list too, maybe in the beginning of the week. That's been your star performer in the healthcare space. Some speculative paper on ZIOP. We saw that twice last week. A little bit in AZN. There's probably one or two names I could have also included here, but just decided not to. I feel like I skipped right over the consumer names, but we saw a big block of ATBI. Really, Win, I think, is a great setup here. This we saw a couple times last week. In the money calls that went up. Of course, this name got beaten up on the headlines of Steve Wynn leaving. But if this thing retakes I would say great if it retakes the purple line, the 50-day moving average, but you got your nice support here right at the bottom of value in Win. A couple other names in this space, a couple restaurant names. Brinker, we saw IAC. We saw a really nice big trade that went out to the summertime in IAC. Really nice looking chart. Skechers, I believe the March 23rd calls, they just bought like crazy over and over and over again. So Skechers I would keep on your watch list for next week. Walmart, we saw a dip buyer on Thursday. We saw some Urban and Ulta. We also saw a little bit of Boyd Gaming, which I believe was on Wednesday. Either Wednesday or Thursday, we saw some calls go up on that one. Trip, we saw calls go up a couple times on Friday. And then to get away from that group, last group, I think the airlines had one day where they showed some momentum. It seems like American Airlines is the one. I was actually liking the chart of United, but we really haven't seen any call flow in that name. United is trying to get back above the 200-day moving average. It's right there. But really the name that they've been going after is American Airlines. So I think an easier trade. You got the 50-day moving average as your support. And I like American Airlines for a long. The purple line is the 50-day moving average, by the way. You also have an MACD crossover. By the way, we're starting to see MACD crossovers all over the place. Another name, hasn't seen any option activity, but I'm looking at is McDonald's. Retook the 200-day moving average. This is non-dividend adjusted, by the way, but MACD crossover coming, or hopefully on the way. Tesla has been a name that we saw call buying a couple weeks ago. I put it on this week's report as well because we did see a little bit of call buying in that one as well. We saw an HYG block go up, the high yield bond ETF, and then also some ITB calls that went up. So, this is an area, speaking of interest rates, that has really gotten beaten up because of the fear of mortgage rates going higher, but which they have gone higher. But if you think that it's a little bit of an overreaction, I could tell you I am long ITB. It hasn't worked so far. My little contrarian play here, but I added to this trade a little bit on Friday as well. Last ad for me, and we'll see if it holds here, and maybe possibly turns the corner. But again, just not performing the same way the technology group is performing. It was up on the day, but underperformed. So not the best sign in the world, but exercising a little bit of patience with this trade and seeing if it will reverse a bit. Again, there's been good housing data, which has also compelled me to get long the ITB, but I did like the call buying on Friday. All right, so that's it for today's video. What I also do is I have in our Slack trading room, I've got a channel that is called Swing Trade Setup. So I post this throughout the weekend as well as throughout the week. A lot of the names that I've already mentioned, these were all mentioned to subscribers earlier than, we got SKX in here. We talked a little bit about EMB. A bunch of different things. All right, guys, so thanks for watching the video and enjoy the rest of your weekend.